Hello forex traders, welcome once again to this channel. Today we are going to be analyzing GBP card. So let's go. On the monthly time frame, let's check the directional bias. Now this GBP card, I don't like trading GBP card because I have my reasons. Now GBP card has somehow been in a range between this zone and this zone, between this point at this point here. Are you getting me? Now to check directional bias, we could see the market broke this zone, retested, broke this, retest, now broke this at this zone again, retested, started consolidating here. Now let me zoom it well so you all can see it. Now at this point here, you all know the market moved from zone to zone, so it is targeting this zone. But from this zone it will go to this next zone that is there to complete the range like this thing. So like this, now we all know that the market is bullish, but you could see at this point here that the market is consolidating, has been consolidating for long. So this consolidation now is something that is a problem here, but you all know that to any consolidation there must be an impulsive move. So we are expecting an impulsive move to respect the direction of this monthly time frame, because this monthly time frame is creating series of higher highs, higher lows, higher highs, higher lows, higher highs. That's also created a higher low, so we're expecting a higher high. Are you getting me? The higher high should come to this key level before making any decision. Now we're going to the weekly time frame to check for any bad boys, anything, any obstacle that may stop this thing from going to that direction. Now I anticipated the market is going to come to this place. That's when I analyzed this trade last. And the market is going to come to this Fibonacci. Then I'll be looking for a series of entry. So I left the pair alone. But market did this, and it pained me that I didn't catch it. Though it's my reason, because I don't usually trade the pair again. I have a reason for that. So market came to this Fibonacci. Are you getting me? Came to this Fibonacci, retested. Now this Fibonacci point here is the thing making this thing to go up, but it has not completed the move. It's supposed to come to this place to complete the move before reversing or before making any decision, because you know that this is in a consolidation point, and we don't usually trade inside consolidation. We have to be extraordinarily careful. So trading with this, we have to be extraordinarily careful. But you all know that this is a Fibonacci level, and the Fibonacci level is turning it up. So market's supposed to at least come to this point here before making any decision. That is the rule. Are you getting me? So market is still currently bullish. But we could see that this is series of this is just the concern here, this consolidation. So what are we going to be doing now? We are going to be expecting this thing to go up. But we can also see here at this point here that the market reacted at this point here severally. Yes, I think so. Now the market came to this place severally. So if the market wants to reverse, we'll be expecting market to reverse to this point here before continuing. I use my Fibonacci to mark out, to check if it intersects together with any level. Yes, so it should be at least this point here. Yes, because this point here reacted multiple times. It came here first of all 1, 2, 3, 4. Now also here again. Now so market may likely come back here, pull back to this place before going back up, or we're going to be going to the daily time frame to check for any other things there. So let's go to check the daily time frame. Remember that is the bar we are going to be catching. So on the daily time frame, we could see a demand zone here, and that demand zone also intersect together with that support zone that I drew. So where is that my Fibonacci? My Fibonacci here. If I draw my Fibonacci from here to here, you could see that market intersects together with, so the market intersects together with this support zone here. You see this support zone, this one I drew on the weekly time frame. Market came here and intersected together with it, and this place here is a demand zone. So market may likely come back to this place before going back up to this place, or market may respect from here, because you see we have 2 points. We have this first Fibonacci zone that is here, and we also have another Fibonacci zone here. So I'm coming, let me take out this, let me show you. We also have this point here. So market may likely, don't mind my weather, rain is somehow falling, so it's affecting the background. Maybe when I'm editing the video I may remove out this noise. So I'm coming, please. So we have to zoom. Market may likely react from here. So you could see here that at this market came to this place. You could see that market came to this support zone and it's also reacting on this support zone. So if market should break this support zone with a candlestick, maybe 4-hour candlestick, then nextly market may likely come back to this place here, because you could see the market has broken this trend line and also this support here that is holding it. So we have two supports, this one here and this one. So that means market has 2 points that market may likely bounce back off. If I could see multiple weak rejection on the 4-hour time frame, then a bullish engulfing candle break out of the range of that weak rejections, then I know market is going to come to these points at least first before targeting it here. But if market should break out with a daily candle, with a 4-hour candle close bullish and bearish, then next zone is here before market is going to be bouncing back up. Are you getting me? Because this thing is looking like a mini head and shoulder forming within the range. If you check it very well, it's forming like a mini head and shoulder, and this is what they call this is also what they call a flying knife strategy. A flying knife strategy, like if I'm to, yeah, it is a flying knife strategy, nothing else. It's a flying knife strategy whereby up, and let me show you why they call it flying knife strategy. This side here held here and this side here held, came here. So whenever you see market moving straight or down and a particular zone or a particular key level held it at this point here, then those know the market is coming back here. And when market come back to this same place, are you getting when 2 points, like you saw this support, this resistance zone and this support zone, when market is moving and the support zone hold it and it came back to it, is a resistance zone held it and it came back to a support zone, just know that is flying knife. Only what you just have to just do, look for, you either draw your counter trend line, or you look for candlestick, depending on how you usually enter, then you enter inside. Next target is this same zone. Market will come to this zone here. Sorry, next target is this zone, this 1.88256 basic point. Market is going to come that side, you understand? That will be the next TP. So catching this will be very, very easy. So this is what I'm trying to analyze here. Market, the main directional bias is this: wait for market to come to this place first before catching the buy. Wait for market. So how are we going to be taking advantage of this trade now? How are we going to be taking advantage of this trade now? If you see it very, very well, you find out that this resistance zone was tested multiple times. Now, and this support zone was also tested multiple times. So in order for us to catch this trade now, there are two things we either do. We either wait, since the directional bias is bullish, we either wait for market to come to this zone before catching the buy, because this is a flying knife strategy to catch the buy, or we either catch the sell from here to here. If it is 1-to-1 risk to reward, it does not matter, depending. Catch the sell from this point here to here, then catch the buy from here to up to this point here. So like this now, we'll be showing you how we're going to be entering the buy or the sell, depending on what you want to. You understand? depending on what you want to. So let's go to the 4-hour time frame. So on the 4-hour time frame, you could all see this trend line, this counter trend line, and you could also see this little, let me take out this line. You could also see market retesting this line here. I'm coming, let me delete it. Let me do something like this. Yeah, you can see this middle line here. So you can see now this middle line there also has a Fibonacci level. So you all see what I'm seeing. Also have a Fibonacci level, and you all know that me, I know that we all know that me, I'm a Fibonacci trader. I use Fibonacci a lot. Fibonacci tells me a lot. So if market should break out of this, the tiny, this is if probability. You see this zone here, this point here where market is reacting from. This is the key here. This is the determination. This is the place that will determine either we buy or we sell. If market should break this place, with a bearish candle, and the candle shall have high volume, something like this, as so. Let me make it dark, more thicker. Should break this place as so. We are going to be entering. We're going to be catching it, no matter how little it is. So far, it is above 1:1. It can give us 1:1 and more. Then we will accept it. But if it does not, we leave it alone. So yeah, it can give us 1-to-1 risk to reward. So we're going to be taking it. Stop loss is going to be here. Suppose it's going to be here, and that is it. So you're going to be use adequate risk management on it. Then if the market should also come to this zone here, that's if the market should break this place, that's why I'm going to be catching the sell. But if the market does not break this place, then the thing is going to do, because this point here, the thing is going to do series of consolidation. At that point here, you're going to be seeing series of weak rejections, telling you the market does not want to come down. You will see a series of weak rejections, something like this. Weak rejection. Then I'm going to be going to a 4-hour time frame and 15 minutes time frame. Then look for our entry model, catch the buy to this place here. But for now, this is the determination. This is the place that will determine either we buy or sell. For now, so I'm going to be grading this trade out of the buy and the sell out of 100. The sell is 80%. Sell to this zone here is 80%. Selling this thing from here to this place here is 80%. Why did I say so? Number one, it has broken this trend line. It has broken the trend line and it has retested back to it. And also my EMA is also showing that market is below the EMA. So market is below this EMA. So this is showing how many confluences. Break of trend line 1, EMA 2. Now this one will now become 3. If this thing should break this thing, I just need 3 confluences. If this thing should break it, I'm going to be catching the sell down to here. And if this place here should give me another confirmation, I'm going to be buying it to the overall take profit, because this place here is a flying knife strategy. So that is all. So what are the concern about this? The concern is that the concern here is, I don't think it does not have any concern. No concern. What is here? The concern is just that selling this pair from here to here is really the risk to reward is small. But my theory state that if it can give me 1-to-1 risk to reward and more, I will take the trade. But if it not give me anything, if it is not up to 1 risk to reward, I will not take it. Are you getting me? So that is it. These are all the things I need. So selling this pair is 80%. Selling this pair is 18%, but for now this place will determine either we buy or we sell. If we see a candle break out of here, we're going to be selling it down to this place as our take profit. Then from here I'm going to be doing another video on how to catch the buy from here to here, from here to the next upper zone. So if you like this video, please make sure you like and subscribe. You can also share it to your friends or any other person that is finding it hard to analyze this pair. So let's go. Have a nice day. Happy weekend.